Welcome to the deep dive. We're here to cut through the noise and focus on what really matters in crypto.
That's right. And today we're digging into Bitcoin and the wider crypto space.
We've got news updates, insights from some top crypto podcasts, basically. Everything you need to get up to speed fast.
Yep. Our mission really is to pull out the key signals from all that information.
We'll touch on Bitcoin's price, Russia launching a crypto exchange, which is pretty significant.
Definitely. And also some interesting institutional plays, Bitcoin's identity crisis maybe, and future mining trends from the podcasts.
Okay, let's jump right in. Bitcoin's price, it's been hovering around, what, $92,448 after hitting nearly $94,000?
Yeah, exactly. It peaked near 94K and then saw a bit of a dip.
So what's the thinking there? Just market jitters.
Well, analysts seem to be pointing towards general caution. Broader macroeconomic uncertainties are making people a bit wary.
Right. So even with Bitcoin's own factors, the big picture economy still weighs heavily.
It absolutely does. It shows it doesn't operate in a total vacuum.
Okay. Now, shifting globally, Russia launching its own Bitcoin and crypto exchange. That sounds like a big move.
It really is. It could definitely shake up global trading dynamics.
How so?
Well, you're introducing a potentially major state-linked player into the exchange world that could change how digital assets flow internationally. It's sort of where national interests meet this decentralized tech.
Interesting intersection. And that kind of leads into institutional strategies, doesn't it?
It does. Our sources mentioned the Supply Shock podcast, talking about a collaboration.
Ah, yes. Cantor, SoftBank, Tether, and Jack Mallers.
That's the one. They're apparently looking to create a competitor to, well, Strategy, focused on a different kind of Bitcoin treasury approach.
A new vision for a Bitcoin treasury. What does that actually mean?
The specifics are still a bit vague, honestly. But the fact these players are involved suggests, there's a real appetite for different ways institutions can hold and manage Bitcoin.
So not just the existing models.
Exactly. It makes you wonder about the next wave of corporate adoption and what those strategies might look like.
And this whole institutional angle connects to something from Blockworks The Breakdown podcast too, right?
Yeah, they were analyzing Bitcoin's peculiar position. Is it a hedge or a risk-on asset?
Right, the big debate.
Exactly. The breakdown really highlighted that paradox. For some, in shaky times, it's like digital gold, a safe haven. But for others, it's all about high growth potential. So they treat it as a riskier bet when they feel confident.
So it acts differently depending on who you ask and when.
Pretty much. It makes its behavior really complex.
Yeah.
And the podcast also mentioned, importantly, that institutional interest keeps growing despite this ambiguity.
Okay, let's switch gears slightly to the nuts and bolts mining. The Mining Pod featured a new report.
Yes, from Valentin Rousseau, forecasting Bitcoin's hash rate out to 2027.
Okay, quick refresher for everyone. Hash rate is?
It's basically the total computing power being used to mine Bitcoin and keep the network secure. More hash rate generally means a stronger, safer network.
Got it. And Rousseau's projections, what do they suggest?
They suggest continued growth in that computing power over the next few years, which is pretty insightful for understanding the future scale and security backbone of Bitcoin.
So pulling it all together, we've got Bitcoin reacting to economic currents, Russia stepping onto the exchange stage, big players exploring new treasury ideas.
The ongoing debate about what Bitcoin is as an asset and forecasts for a more powerful mining network underpinning it all.
It's a lot happening simultaneously.
It really is. And these pieces, they aren't isolated. They all connect and paint this picture of a crypto world that's evolving incredibly fast.
Which brings us to the final thought for you, the listener. With all these moving parts, the price swings, Russia's exchange, new institutional strategies, that hedge versus risk debate, and growing mining power.
How should established finance and individual investors maybe adapt? What strategies make sense now?
And, thinking bigger picture, what are the long-term ripple effects if a major nation like Russia really establishes its own crypto exchange infrastructure?
Yeah, definitely some significant questions to ponder as you navigate